Welcome to FX Street. We're going to talk a little bit about the DeFi space and some of the cryptos in particular, how they're performing, what to look out for, and why I believe it's going to be a very important sector coming up in the future. But before we do that, head on over to YouTube, join our channel by hitting that subscribe button. Follow us on Twitter at FXS Crypto, and you can follow me individually on Twitter at JustAnalysis1. I've shown this a couple times in some other videos, but it's called a relative rotation graph, and essentially what you're looking at is how these instruments are performing against a comparison index, in this case Bitcoin. So there's 4 quadrants: leading, weakening, lagging, and improving. And you can think of it kind of like a race. If something is in the leading category, that means it is like in first, second, or third place. It's ahead of the pack. Weakening means that you're losing momentum and slowing down. And lagging means that somebody tripped you, you pulled a hamstring, you passed out. Lagging means that you're kind of in dead last. And then improving is kind of the part of the movie where the underdog is starting to run from last place, getting into the middle and starting to pass everybody up. But improving means that you are gaining momentum, that you are gaining speed, importance. And then when you transition from improving to leading, you're back in the lead. And in this case, Zilliqa is clearly on steroids because it is way off in la la land over there. But the point is that the further away that something is from the center, the better the trading opportunity. So typically you look at things that are, moving from lagging into improving as something to look at to go long, and things that are going from leading to weakening or are down here into lagging, they are something to look at on the short side. Not all the time. Things don't travel in perfect circles. Things can go from leading to weakening and back into leading again. And that's same on the other side. So the point is that I made a customized index. It's made up of the 13 top market cap decentralized finance cryptocurrencies, that the top market cap out of all of them, the top 13. And it's weighted with a geometric average against Bitcoin. And so like a lot of other altcoins here, you're seeing that most of them are kind of underperforming Bitcoin currently, which is fine because when I look at it, it's planing off here. And you'll see something like Polkadot, for example, is one that is, I'm out of all of the DeFi ones, Polkadot's the one that I'm most excited about as far as how much upside potential it has. I just did an article on it today, or yesterday, depending on when this video is posted. It's either today or yesterday that I did the video. But Polkadot, for example, as far as cryptos in the DeFi space, I have a target up here at 100, and there's a reason for that. And that's because of this column of O's. Which existed, it was first printed on November 3rd. So the first reversal column of O's was formed on November 3rd. So you have November, December, January, November, December, January, February, March. And then we're getting into April. I mean, it's almost 5 months since there's been a reversal column. And I don't know why this column of X's is even here because it has not hit 24 yet. It's one of the weird things with Optima's data. But Polkadot has such an immense amount of upside potential relative to its peers that it'd be a hard one to miss. There's some that are, as far as underperformers in the space, Polkadot is a definite one. There are some that are kind of in the lead. Another laggard is probably has been Phantom. It had a little bit of FUD regarding a couple of its people leaving, but Phantom's kind of gained a little bit more traction, but it's still, there's nothing wrong with it fundamentally. I mean, it's still a high yielding, high return, interest yielding bearing instrument that is just really, really at a fantastic discount, in my opinion. And then you have some others that are in the DeFi space that are really they're out ahead, and they're probably going to face a little bit of pullback at some point. Tezos is one that's had a nice move, but it clearly shows it could continue moving higher. And then Cosmos is in that category as well. Or Atom. I'm going to find you where you're at over here. You can see just a lot of even though the relative rotation graph is showing the majority of the DeFi space still trending lower against Bitcoin, it's actually planing out. It's evening out. And you're kind of seeing that reflected with price action. But, Atom is kind of getting into a better spot to move higher as well, crawling back into that ascending triangle after breaking down below it. And then AVAX, of course, has done very well, but Aave in particular, probably not one we talk about a lot, but Aave in particular has performed beautifully. Yesterday's price action was just crazy. Look at that. That's where's the? I need to measure that move. That is just intense. Aave. Yesterday's open to its close, 32.8%. That is a heck of a drive, and it converted into a bull market on its daily on the point figure chart. So, anyways, long story short, DeFi space, a lot of it is most of it is either kind of flat to you're buying at some temporary highs, but most of it is still undervalued. And one of the things that I really want to point out with the DeFi space is that in a world where interest rates are likely to go up and inflation is going to go up, you're likely to see equity markets do something that two generations have not really experienced much of, and that is a stock market that either just trends lower for many years or it stagnates and it just kind of ping pongs, and it looks sort of like it may look a lot like the Dow Jones did back in. We'll have to look here. Let me just go to the monthly chart. In this range here, you can see between, really November of 1965 all the way till, 82, you have this stock market that was really just kind of range bound. By the way, this is the exact kind of environment that Wells Wilder invested and traded in, and this is the kind of market that he experienced when he developed the relative strength index. So, that's just a little random thing there. Anyways, what's going to make DeFi so important, it's probably not something that Satoshi Nakamoto ever thought about in the around 2007 and 8, but the DeFi space is probably most recognized for one important thing, and that is the yield that it gives to people who voluntarily stake, lend, host, whatever the word is you want to use, you generate a return on parking some type of crypto there. And in a world where interest rates are likely to go up, you're going to have municipalities, separate states, countries, different regions, central banks are going to be competing for high yielding instruments. And, you have, 3 generations that have gotten used to an equity market that just goes up like crazy. I mean, you don't have to look at the this is going back to 1897, and you can see that the general slope of equities has been to gradually pop higher and higher and higher, and it's just kind of what it's done. And if it's going to pause at some point, then people will want to generate money somewhere else, and that'll be yield. People will be competing for yield. Companies, banks, everything will be competing for yield. And what's interesting to me is that right now, in a lot of places in the DeFi space, places like Nexo, Celsius, Crypto.com's app, and many other places, you can park your stable coins, essentially cash, and earn a 12% annual percentage yield, where some of these entities, they pay that, and then it compounds daily, not 12% daily, but 12% spread out over a year. But they pay that reward daily, so it does compound daily. And there are no banks that do that. there's no, I mean, the closest that you can get, I think, relatively safe kind of returns like that in a risky space like crypto are probably BDCs in the stock market, like business development corporations, REITs, those kinds of things where they can yield, an 8% monthly, quarterly, or 8% yield return a year. I mean, and they're hard to sustain, but you have this DeFi space that provides these fantastic, albeit risky, high yielding opportunities. And a lot of them don't require you to lock up your cryptos for months or a week. You can put it in there and withdraw it as you need. So I think the DeFi space is going to be as important in the next couple of years as Bitcoin was after 2009 and 10. I think this is really going to be a massive new frontier, and it's just one of those, and they're just kind of speaking out loud, but it's just one of those things where not a lot of people get to see the advent of something new like this in an established asset class, a borrowing asset class, and get to see it become truly decentralized and away from central authorities, which is probably going to provide its own headaches with regulations and such, but good luck stopping it from happening. But yeah, that's it. That's kind of my spiel here, and I'll just end it there. Thank you for coming and watching. Please don't forget to like, comment, subscribe, follow us on YouTube and on Twitter.